Alright, alright, guys. Today, welcome back to another video. Today, here we're going to be basically just this is like a tutorial video, kind of to thing for basics and for beginners that are starting forex trading. So this video is going to be talking about how to identify support and resistance on the charts. As many traders know that these are like the basics or the starting point of trading in general, whether it's forex, crypto, or stocks. Trading support and resistance is like the basics form of trading. So we're going to start off the monthly. I'm going to break it down, and obviously as we go on, I'll show you how to find where the support and resistance is. So now, starting on a monthly time frame, we can see that price rejected when it got to this here area here. So we can see the pattern that's been happening over past price few actions, as we can see. So this can already give us like a form of a line here. So as we can tell, so looking at the line, we can see that there's a reaction every time you know price goes to this zone here. So starting all the way back in 2011, we can see that price came, touched it, rejected to the upside, touched it, rejected the upside, second time touched it, break it, and retest it to the downside. So therefore, this is a very key price level that we have here. Price came up, break past it, tested it here. So it was a support, and obviously it was a resistance level here, and it became support here. So again, another key level of basically what we call the resistance and support zone. And obviously you can see another touch here, right? Literally the wick, right at the bottom of the wick, came and touched this support that we have that was turn resistance. So again, we can see that this level is very, very important to the Euro CAD. And obviously recently we had price come and touch this area here, which it did, and obviously showed an upside to touch. Obviously, which it rejected to the upside and went to touch the last resistance that we have here. So this could be um, a very, very key level here that a lot of traders in the market will be looking every time that price comes this level. They'll be looking to see how the market reacts so they can obviously take advantage and enter into positions that will be high probability of making profit in this format. So yeah, and then we could use this level here as resistance, for example. But obviously, this is much more like in-depth understanding. So this is just the basics, just to kind of for you guys to get how markets really work and stuff like that. So this is like a support level here. Now let's find a resistance level. So as we can see here, resistance is basically roof. So whenever we say resistance, we're talking about the roof, the ceiling, and then the support is the foundation. So like the bottom. For example, if you're building a house, you need a foundation for the house. That is what in trading is called support. So it supports the house to stand still. Whereas the ceiling, the roof, is the resistance because that's what covers and that's what blocks any other like rain, flood, and all that stuff from coming. So that's how trading is literally the same sort of thing in trading. Now looking here, we can see that price rejected once, twice, three, four. So we can see that there's a lot of pressure coming from this roof here. So we can already mark this area here as a resistance. So as you can see here, this is just a easy to break down and obviously to kind of make it simple. So I'm gonna, you know, resistance and support. So this is how traders mark up. This is just to show, obviously analyze and obviously show. So obviously, we can go back. We can even see that price always rejected this area price area. So we see here, see here, we see here. So there's a lot of reaction whenever price comes to this level of resistance, as we can see. So it's very, very important that we therefore note that this is a very, very key level for a lot of traders on the monthly time frame, as you can see. So this by already definition can already tell us that you know we're you know, gives us the range that the market is trading between. As we can see from, you know, 2013, it's literally been this range that the market has been trading for the past 7 to 8 years, which is quite a lot. So this really breaks down how the market works. Now going on to the weekly time frame, we can obviously find support and resistance that are within the time frame that we can trade. For example, forex traders, intraday trading, and stuff like that. So again, as we already know, we already know that this level here is a support level on the weekly time frame. Now coming to on the so we can see that whenever price comes here, we see a, what I'm saying. So if, price tested here, one time dropped, second time dropped, third time dropped, and before we see a fully drop. So already this is already telling me that we have a resistance level on this price area, as you can see. So already, and already, like I'm saying, seen, and obviously when we look back, we can see the same, that whenever price comes here, I'm saying there's a reaction that we see, and again another reaction, again another reaction, and again another reaction. All these are all indicating, showing us that there's pressure on these price levels. There is pressure there that, whether it's buying pressure or selling pressure, it's a pressure that does affect and causes the market to react both upside or downside. So this is already telling me that that is the resistance on the weekly that we can see here. Now I'm going on daily. So this is where most traders will might want to enter the trade. As you can see, it aligns perfectly. So looking at the daily, we can see price came down second, third, fourth, and then rarely go to it, and obviously came down fully. So this is already showing to me that this is level of key resistance that I would want to be looking at in the future terms. So by seeing this, a lot of traders would, a lot of buyers would mainly put their take profit around this area of resistance, due to the fact that they've already looked, the past price history action shows that's a key, what we call resistance here. So that's how the market can be, identified in terms of finding the trading support and resistance. This is how most traders start off working their charts. So yeah, that is just, the basics of identifying trading, what I'm saying, basics in terms of finding where the price reacts over to the upside and the downside. These are very, very important for even any trader, whether that with institutional or retail traders. They always have to know that there's a support and a resistance that needs to be identified, so that these can help the traders to understand what is going on and how the market works. So yeah, that is my, video for today. Drop in the comments, guys. Like, comment, share, subscribe. Let me know what you think. Just like a quick video to kind of show you the basics, understanding how trading works. Again, it's your boy FME. Guys, like, comment, share, subscribe, do all that nice stuff. And your boy is out. Peace.